Friends, I'm back, but now I'm trying to change the format. I'm trying to make it more interesting by bringing in third party thoughts to my dialogues. And I'm bringing in a very good professional. His name is Shankar Srinivasan, and he's a chartered account, more than 30 years experience. And he's a professional investor in the market. He's a good analyst, analytics, has a good thought of analytics in finance. And so I thought that we will discuss with him some of the thoughts which are now emerging in view of the crisis with the US, the EU FTA, the Ukraine war. A lot of things are happening. Fantastic things are happening. So I thought we look at the different picture that can emerge from that. Welcome, Shankar. I think you'll give your views on that.
Thanks, VCK. Pleasure to meet. And the points that you have talked about regarding all the recent trade deals that India has involved itself in, you should actually thank Trump to start off with, because without him pushing the whole world, these trade deals, which were stuck for 20 years in the case of EU, 6 years in the case of New Zealand, etc., would never have seen the light of day. Now that these have happened, and they have taken a good analysis of the red lines as far as the Indian economy goes, and also what the EU goes. So, for example, I believe a whole lot of agricultural produce on the EU side is exempt from the FTA. Similarly, a whole lot of agricultural goods on the Indian side is exempt from the FTA. And those that are converging from high rates, like let's say 150%, 200% for cars and liquor, going down to 20%, are happening slowly over a 6 to 7 year period, giving sufficient time for companies on either side to calibrate their costing, pricing, etc., so that they don't feel shortchanged with a sudden price reduction. So it's been a well thought out FTA which will help the two economies. Now, whether this will stop the world from going into economic shock in the event of de-dollarization, I don't think so. A de-dollarization process is not a welcome one, but I think the end game is that it is going to be a multipolar world. So the de-dollarization will happen to some extent, not to the extent that people believe that there will be anarchy and total chaos in the world. So it's a slow process, and I think it started back in 2011 when China started exiting US treasuries. The world is now doing what China has been doing for the last 16 years. So it seems as if de-dollarization is the game in town.
Will the new FTAs, will they have a issue with regard to the concept of de-dollarization? That is to say, because BRICS is now looking at a bigger chunk of the world, about nearly 3/4 of the world is looking at BRICS. Will that affect the dollar vis-a-vis BRICS and vis-a-vis the FTA?
Yeah, this is exactly the pain point that's going on right now, playing out rather. If you look at what Trump is trying to achieve, he's trying to hold on to the US dollar trade in the world. I mean, there is the US trade by itself, which is of course 100% dollar. And then there is the oil economy of the world, which is largely pushed in dollar by the US, and they don't brook any nonsense from any country which tries to sell outside the dollar with respect to their oil and gas. So this now is playing out in front of our eyes. I mean, this is part of history in another 10 years. the moment when the world shifted and started using currencies other than the dollar for their energy uses. So yes, the de-dollarization will happen, like I told you, but it is not going to go from, let us say, currently 60% of the world trade is happening in dollar, it will go down to zero. That's not going to happen. The sheer size of the US economy means that at least 25% or 20% of the trade will always happen in dollar. So to that you can add another one-sixth going towards the dollar. So this 60% may go down to 40, which itself is a tectonic shift, because whichever currency gains that 20% shift in world trade, that currency will be the next bellwether after the dollar.
Now, leading on this point, would you say that will it affect the dollar vis-a-vis the rupee in a short run or in the long run? Because we are seeing the rupee sliding against it. I won't say, I think it's looking like a slide, on a children's slide. You're just standing on top and you're sliding, 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 and are able to stop the slide.
Okay,
Is it going to affect the rupee?
Yeah, it will in the short term for the simple reason, not because of all the geopolitics due to de-dollarization, more because of the consistent non-stop withdrawal of FPI money from the share market. So if I don't have the data with me right away, but if we had access to internet right now, if you just pull out the data, I think almost 14 of the last 15 years, FPIs have taken out money. On a net basis, they've taken out money, and they've been accelerating it in the last 3 years because the Indian markets were heavily overvalued. So you can't blame them. So the short-term slide that you're seeing is largely because of that. Secondly, the RBI, I think, has got its indication from the government to allow the rupee to slide because it helps us in fighting the tariff war that's going on in the globe, because a lower currency allows you to absorb the tariffs and therefore allowing your goods to appear cheaper compared to others. Now, coming to the actual fall of the rupee itself, historically, if you look at the rupee, till 2013 August, when we went and did a massive $32 billion borrowing to shore up our currency hit a bottom of 69 point something. So from 1947 till 69, if you take that CAGR and extend it till 2026, I think today the rupee should have been at 115 or 118. So compared to that, I think we are still doing better off. But yes, the present slide is largely due to the FPI outflow and also the government being sympathetic to exporters and allowing the slide in, of course, regulated manner. They're not allowing sharp falls in the rupee, which is why the RBI steps in now and then and does some little buying. But they are
I'd like to interrupt you here. And I just like to say whether, you used a wonderful word, absorbing the tariff war. You mean that since the rupee is coming down, and because if the rupee had been higher, the tariff cost of the goods which the other countries import with the tariffs imposed on them would have been higher.
Yeah.
So because of the sliding rupee, this is benefiting the exporters, and you're able to, is that
Yes,
what you're trying to say?
Exactly. And unfortunately, this has been part of RBI strategy since 1947. The RBI, in its game plan from 1947, funnily has this idea that a weaker rupee benefits the economy, and that has continued through all the various governors that we have seen. When we are an import-dependent economy, so technically it doesn't make sense to keep weakening the rupee, but we have to play with the cards we have been dealt with. So yes, a cheaper rupee, and in this case, it has fallen quite sharply from 82 to 92, which is almost an 11-12% slide, has to a large extent mitigated the 25% and subsequently 50% tariff the US has imposed, and also what I think the EU has recently imposed.
So I think we'll continue on that aspect shortly. Okay.